Claire Jones, Financial Times. Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about, on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
So I think there's quite a wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is now a reality, and there's clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. We endlessly discuss this between ourselves, and then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember, though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times. But from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do. There are, as I mentioned earlier, there are no risk-free paths now. It's not incredibly obvious what to do. So we have to keep our eye on inflation. At the same time, we cannot ignore and must keep our eye on maximum employment, those are our two equal goals. And you will see that there are a range of views on what to do. Nonetheless, we came together today at the meeting and acted with a high degree of unity.